Well, guys, the results are in. Microsoft and Meta have disappointed the market and both now are trading down in after hours trade. But really, could the storyline be in dark pool activity, options flow, and possibly the bonds market? In today's video, we take a look at the good, the bad, and the ugly, including triple leveraged funds getting some sneaky trades, possibly from Wall Street. That and more coming up in today's show as we cover stocks, commodities, and cryptos around the world. As always, there's some good ones and there's some bad ones. Let's get into it. This show is not to be missed. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, I'll be going through everything to do with markets right now. And you will notice even before the after hours trade, there were big sells in the semiconductor space. And of course, in after hours trade, Microsoft and Meta were both down 3 to 4%. So what gives this earnings season? Well, as we know, it all comes down to whether this market is overall healthy or not. We've been suspecting there could be a dip or volatility into this year's election that's going to happen around now. And a lot of it has to do with how close this election is and also how we might have some instability between the knowledge of who's maybe going to become the president and who's going to actually have the Senate. Of course, this is the discussion point for next week. But more importantly than any of that, we need to look at the data underneath the hood for the market. Even if we do see a sell now, should we be terrified? Well, here's a great chart that shows the percent of S&P 500 companies with positive year-on-year price change. And we're now sitting at 88% of stocks. Now, you might notice from this chart, some of the great bull markets usually have this type of underlying characteristic. And while we might be getting up to the upper ends of this particular read, it can stay here for quite some time. So should you be looking at this market a little bit differently? If you're coming in here and watching The Daily Show from a bear perspective, you might want to take those goggles off and say, wait a second, yes, the market is pretty strong. Maybe we'll get a pullback, but should I really be buying this dip? Well, let's take a look at some of the biggest reads. Semiconductors, small caps, transportations, biotechs, home builders, banks, retail, and even steel. Some of these metrics can be used as good health figures on the overall market. And as you can see here with Grant Hawkridge's data, all of it kind of looks like it's in an upward trend at this stage. That's a good read again for any pullbacks being met by bull demand into the end of year. Another read that you want to be looking at is the MOVE index, put call ratio, VIX, and of course, bonds. Now, why are bonds so important? Well, if bonds are freaking out, in particular, credit spreads are freaking. If we remember, 2023 was well known for credit spread freakouts before we found out that many big banks were potentially going bust and obviously had to be saved by the central banks themselves. But this is a good read of whether the market's freaking out. While volatility is certainly on the rise coming into this US election, the overall credit spread is very, very tight. And that suggests that the market is basically saying, you know what, we don't see any fear on the horizon at this stage, and that pullbacks should be met by bull demand. Let's also take a look at gold, though, before we get into the dark pool charts and we look at the actual activity there. As you can see, guys, gold has been one of our favorites here on the channel, and it continues to go from strength to strength to strength. I just thought I'd kind of congratulate a lot of you. We did a seminar last night, and I will say this show is going to be a little bit shorter than normal because I am out traveling at the moment. Normal will resume tomorrow. But basically speaking, a lot of you guys were mentioning, hey, I've been in gold all year, and it's been damn good. Yes, it has been damn good. The year fact stats here are actually up 40% for gold. So for people that doubted this particular precious metal, remember, this is a great example of there are times to own something and there are times to not own it. And that is why we've been so big on Bitcoin recently here on the channel since the back end of September. Why? Because the statistics look better. And of course, that's something we do play a lot here on the channel. We talk about stats, we talk about TA, and we bring it all together to bring a very compelling storyline for whatever particular thing we're looking at. Remember, this is a huge worldwide market with flows that go through so many different asset classes. And some of the feedback I even got last night was that's what you love about this channel and what you love about markets, that it's more than just the crypto sphere or gold or metals or stocks. It is actually about kind of a living, breathing, you would say, info system of overall finances, and what you're looking for is where are the big flows going to next. Well, based on seasonality, we've had a pretty strong movement up in, of course, things such as regional banks. Well, you may not know this, but after the election, particularly November, could get even better for regional banks. And of course, we've looked at them on the TA charts and we've seen this strength come through. But 90% of the time, regional banks tend to do very well in November. And I think this is a big stat, especially depending on who wins the presidential election and the discussion about deregulation. So watch this space. Of course, we do have already some pretty strong charts for the Russell 2000, and we've been talking about flows potentially moving there over into the end of the year. 90% is a pretty good stat, better than most traders out there. Let's also just bring up another stat that I always like to bring through. Remember, we ended up a positive September for Bitcoin, and that has always ended up in very positive 3-month ramifications. Now, we don't have too many stats behind this, but remember, October, November, and December generally all end up positive. Of course, we can't guarantee these types of things, but so far October has been pretty good. Maybe not up there with the crazy stats, but it's been pretty damn good. November and December, hey, they could continue to flow on effect from this particular current big move. And that makes sense from a flow perspective and from a technical perspective. Now, you might think earnings is all over yet now, but it certainly isn't. We still have Apple and Amazon on Thursday after the close. And based on what we're seeing this week, we've kind of got a win for Google, and that's broken out and actually moved to the gap fill, which we'll look at very, very soon. And then, of course, we have a move that's going towards Microsoft and Meta, which is both down. And now we find out what Apple and Amazon are going to do. At the moment, the market is tightly coiled between a very big range. And if it breaks to the downside, then we have to expect potentially 5,700, which we'll look at in a moment. And if it breaks to the upside, obviously, we're going towards all-time highs and a pretty good squeeze. Let's look at the data, though, from big transactions. One of the biggest transactions ever recorded in the last 2 years has just come through on the Qs, and you can see it's right at the highs. So could this be a sell? Well, when we get these big transactions, especially at highs, you've got to start questioning whether it is a sell. Obviously, these are the ones that we've had most recently, and we should be paying attention to these. Should you be freaking out if you're holding markets for 3 months? Well, of course not. We just saw the breadth. We just saw the strength in the market. From a day trader's perspective, or even someone trying to get a little bit better price, this is certainly a cautionary tale. Here's another one here. ProShares Ultra Short Qs just had a massive transaction. Guess what? The market has actually started to fall in after hours. Could it be loose lips on earnings? Hey, we always say that the market tends to know quite a lot about what's going on. Let's move over to the SPY now. We've got a big transaction going in through there, just near into the close, and again, right around that price that we continuously see as a fairly good resistance point on these markets. And then we move over to Tesla. 3 huge transactions now, all at the 260 to 265 level. That doesn't bode well unless someone's accumulating here, getting ready for another big move up, because of course there's no doubt some profit takers after that big move and big squeeze that happened from Tesla after earnings. I think Tesla also may suffer, kind of depending on how we go in the election. Obviously this stock is now possibly linked to that, which it hasn't been in the past. So that's going to be very interesting there to see how it plays out next week. Let's now have a look through the markets. We've got solar coming out the best over the last 24 hours. Probably no surprises to us. Regional banks, probably no surprises based on the stats either, that's doing well. And semiconductors was the worst market, followed by pretty much technology and some metals. If we move over to the last 5 days, solar is now the best. Clean energy is now the second best, which is the total flip from where it was only 2 weeks ago. And we've got utilities and gold down the bottom in terms of overall 5-day rotations. Now, gold stock, of course, will probably improve now because we have started to see a little bit of a movement towards the upside. But yeah, it's now down in the lowest for the 5-day rotational switch. Let's now jump on over to the markets. The big story here is, are we seeing a sell from Wall Street? Well, we don't often use these kind of net delta switches, but you will notice that even during this bull green candle that looked green, we actually ended up having a net delta of negative 411 million. So that was actually a negative day. The last 3 days have all been negative, which kind of suggests there is a lot of selling that's going on in this particular market. And it seems like in general, the selling is coming in near kind of the end of the day. So if we have a look here at the 2 hour and we check this out, have a look where the sells keep coming in. It's always a gap up and a sell into the close. Now I do pay attention to this type of stuff because when you have a gap up and you have a sell into the close, it suggests that the retail traders in the morning are trying to buy the dip and the big traders are coming in and saying, oh no you don't, we're going to push that back down. And ultimately this is going to come back to 0 DTE options. Here are the options high and low levels in terms of where the range of the market is meant to hold, but we do know that if we get too much selling and we start to move beneath 5,800 and underneath this daily 20 moving average, that could open up the floodgates of further option 0 DTE negative gamma. Let's actually have a look at the gamma here. And you'll notice 58.50 continues to be the big call rate, and 58.05 seems to be the big puts. So if we get underneath where we're trading literally at the time of this recording and we hold below there, have a look at the 1st of November. Wow, people are really positioning hard for this non-farm payrolls because this is going to be a messy number due to, of course, the hurricanes, and it's expected to be like 100,000 problematic number kind of coming through. We're going to have a weird non-farm payrolls, and that allows for that plus Apple plus obviously potentially Amazon, Microsoft, and Meta to take an effect on the markets. If you notice where the big put wall's going now, it's 5,700 to 5,730. And if we move through the 5,800s and we hold below, guess what we're in again? Negative gamma. This is actually one of the more dangerous periods that we've seen towards the bulls for quite a while in the markets. So things are really changing here when it comes to the options flow. When we move over to Tesla, 262.50 remains the big core wall. So really underneath that, we're kind of more in a neutralized market, and we've seen that all week. So that's really the main level there for Tesla. And when we move over to NVDA, it's still in positive gamma, and realistically, it's still just holding up. It's actually just falling underneath the positive side a little bit because it keeps going underneath 140. So if it can get above 142, of course, we've always talked about 150 being the next strike, as you can see over here on the right. That seems to be the kind of thing that the market wants to go towards. But guess what? Even NVIDIA won't be able to go to 150 if the rest of the market does start to have a bit of a pullback. So the big thing here is what's going to happen. Will we go from underneath 5,800 again? If we do and we close underneath the daily 20, does that mean we're going to 5,700? I think the stats are starting to align a little bit more that way, and this would be normal within, of course, an election year. A little bit of volatility, which the markets look for a while, and I think a lot of it will come from instability between who's won, let's say, the presidency and who's won the House or the Senate in this case. So effectively, that's going to be, I think, the big discussion next week. It's likely, according to Goldman Sachs and others, that we won't have both outcomes on the same day. Let's now move over to the leads here. Home builders was one of the ones that we warned could be telling us that markets are a little bit in a pullback for now, a little bit sideways. Maybe we're getting like a 3-4% correction, something like that. We also saw high yield junk bonds dropping off a little bit, and while credit spreads have remained very good, obviously this is something we continue to look at on the markets. Then we've got the US dollar. The US dollar has been in a resistance kind of form. If we break underneath something like a 103.80, that could of course bring downward pressure onto the markets. So something we will be paying attention to on the US dollar. And copper remains sideways. So you can see here, long leg dojis, it's an absolute coil fest. I'd have to go probably more likely break up, but we'll see what ends up happening, because at this stage we continue to fail to break above that 4.4 level. And because we can't get above that 4.4 level, we can't push to 4.5. So constantly long leg dojis, 1, 2, 3, 4. That's a lot. It's going to be a big breakout when it eventually does happen. Let's now move to gold. Big bull. Gold doing even better than I expected. Obviously, we're going with $3,000 for gold into 2025. And who knows, maybe it'll get there even faster. Everyone's becoming a gold bug. I've noticed a lot of people moving over to it now, which is good because that means it's in the kind of back end of its run for now. But we are constantly looking for more flows and stuff. And the price action is very strong, so it continues to be good. Silver, on the other hand, did pull back. So this was an excellent day trading trade all the way up until this kind of level that we've had issues with, which is 34.50. But it's pulled back now to the most traded zone. This is an important level. I'd like to see silver hold here and find buyers again. It's very important it does. You do not want a lower low on silver underneath 33. That will kind of bust this trade off and then make it so it can continue to go down further. So silver at a pivotal point, I think a lot of day traders will be looking at that saying, can it strengthen? First good signs for oil since the fall off of the start of the week. Yes, I would say the bulls have just started to regain themselves on the small price action. And for some people, pullbacks now will be met by bull demand. And in general, this is the first bullish structure we've seen since Monday. So it's not too bad here for oil on the smaller timeframes. Obviously, you're going to be a little bit more careful on the higher timeframes, but you'll notice that they keep pressure supporting around that 68, which is very important for the barrel. When we move over to Google, it was a straight into gap fill, 182, and then down. Yeah, perfect take profit. I know a lot of people say inverse head and shoulder, But realistically, that gap fill is beautiful, yeah, absolutely beautiful. Fantastic level for people to be taking a bit of profit off on Google. And now if it fills to the downside, we get like some kind of pullback due to maybe Meta or Microsoft earnings, who knows, that could be also a great pickup to continue to go strong to the upside there. Microsoft is trading down in after hours, 416. As many of you know, this is my favorite big moat stock on the markets. But as I've recently said, it's too high and too much in valuations. So I'm not surprised to see it down here. Obviously, there's some issues with the earnings. Maybe we'll do a bit on that in the next video. We just don't have time here as we are traveling. But I'll do a recap on Microsoft and Meta and Amazon and Apple near the end of the week, so make sure to subscribe for that. But basically, both were down. Are they down to points where you're like, oh, I'm terrified? No, absolutely not. Of course, we're at resistance here on Meta. Microsoft was kind of floundering for a while now, and we could be looking towards gap fills. Again, 567, kind of 57 will be an interesting level for Meta traders. Will we find bids there? That seems like a kind of likely area to find maybe a bid. Tesla traders, we all know what's going on here. Effectively, there's people taking profit. You wouldn't have 3 massive transactions all at around 262 otherwise. And that's because it gapped up off that island, hit the resistance. Probably a lot of people going for 300. I wouldn't blame them. I still think it could get there. But at this stage, a little bit of a pullback, which is pretty normal once you get rid of the gamma squeeze. US 2K, up, down, all around. Overall, incredibly strong. Compared to the other market indices, you can see here the Qs now fallen off a little bit, the S&P floundering around, and the US 2K doing okay considering. And that's because things like regional banks, biotech, solar, clean energy, they're all starting to do a little bit better. Could it be that the end of the year is better for the Russell 2K? At least on the channel, we're starting to feel like it could be. NASDAQ down pretty hard, obviously rejected into those highs over here. And at this stage, you've got to say that is a decent rejection. First support level is going to be somewhere around 20,100. So for now, it's kind of in the middle of nowhere land. Let's now move over to crypto. Great trade in Ethereum. If anyone did take this, pretty nice long coming off that resistance breakout. We saw 25.64. Very nice long. Kind of think there's more in this one. Obviously, Ethereum is super far behind Bitcoin. And I know, maybe it's not the coin it once was, but still I think that really a lot of these coins just follow the leader. So if we do manage to get a breakout past this alert of 2,800, that'll be another big kind of momentum pattern. We might be moving up to this supply over here of around 3,300. So that could be a very interesting trade on crypto into November. Let's now move over to the best one though, which is Bitcoin. And Bitcoin is very strong. As we said over on our X feed when we couldn't do the video yesterday, we mentioned, and of course, follow us on X if you want to get updates like that. It's always great to do so. We actually were looking at Bitcoin, any pullback really met by bull demand. Well, that's exactly what's happened at this stage. And even a flash sell, I think, will be met by bull demand. This is a very strong breakout coupled with flow. I'm not sure. We just went to the all-time high area here. We did obviously found a little bit of rejection of that. I think this is the move that obviously gets us an all-time high and keeps going. We've said that for a long time now. And of course, you can go look through our feeds and videos. Yeah, so it's been a great move on Bitcoin. This is what happens. Flows move from one place to one place to one place, and we keep looking for that. So well done, guys. And for now, Bitcoin is obviously finding buyers. If we do end up getting a pullback, I mean, that looks like a flag to me, but anyway, we'll see how it goes. If we do end up getting a pullback, this range in here, around 67K, will act as pretty decent support. So what's the big news for the end of the week? Well, it really just comes down to this jobs number, the US election, obviously next week, and of course the big earnings. There's a lot of info here, a lot of noise. The market hates uncertainty, so that's probably why there's a bit of vol coming in. Is it something to be concerned about? Well, I guess it depends on your horizon. If you're a day trader or someone looking for a dip, we might get it here. We might get that 3-4%. But as we've said many times, it's unlikely into the back end of 2025 we're getting a 10% sell-off. And I think that's really important. It's data, statistics, all of those types of things aren't going to give us that. So calling a flash crash or a massive dump here in markets is probably not likely, and therefore it's not impossible. Of course, anything's possible, but it's not likely. And therefore, you really should have a generally positive attitude towards the markets right now. Regional banks will be something to watch into, as we said, November. And yeah, it's going to be a very interesting time. So make sure to subscribe to the channel. Check out the links in the comments down below as well if you're interested. And of course, it was great to meet so many of you in Sydney last night, Australia. It was fantastic to have the event. And in the future, we'd love to have some more around the world. Thanks, guys, for watching. Give it a thumbs up if you enjoyed today's video. Subscribe, and we'll see you in the next one. Bye for now.